Hi everyone, my name's PK, and here I have a client of the Property Investment Accelerator, a really good client, Richard Bharata, who lives in Sydney, and he's bought 6 properties in the last 18 months. He actually started his property investing cycle or property investing journey just before when interest rates started rising in 2022. And despite interest rate rises, even on that first property, he's already made almost $100,000. And we're not talking $1 million property here. We're talking sub 400K property. But we'll go through, property by property, the high level, where it's located, what he's bought, why he bought there, how he chose to buy in that sort of location or that particular part of the suburb. But I think more importantly, we might kind of navigate and meander our way into like more important aspects of property investing, like risk, calculated risk, how to think about building a portfolio of the long term, how to actually build a cohesive plan to achieve passive income, and so many things like that. Let's see where it goes. But without further ado, Richard, like I was saying before we hit record, I'm just really impressed by your journey in such a short period of time. It's much more faster and expedited than my own journey when I was at that stage. So big congratulations and a big kudos to you.
Thanks, PK.
Uh,
Kudos to you.
and I'm obviously very grateful that you made time on what is it, Wednesday, 6 p.m. after work for you. So that's really cool of you as well. But let's kind of just get into it. So you had bought you're saying to me just before, you'd bought your principal place of residence. That was like the first property you'd ever bought in Sydney, which is where you live, in 2020 or
21,
2021.
2021, February.
And
Yeah.
you'd had a great growth on that because that was right kind of at the start of that boom. Just take me through like your sort of thoughts on why did you choose to do the course versus just doing it yourself versus using so many buyers agents, or just kind of like how did you get into all this in the first place?
Yeah. So I bought my first property in Sydney, as you said, early 2021. And since then, I've been attending auctions in my area, and I can see how it just grew like never seen that before. I bought mine for around 1.2, but then easily 1.3, 1.4, 1.5 in the span of 6 months. And I always knew the concept of building portfolio. This is back in 2020. I know how the concept works in terms of buying affordable properties here and there, but I don't know where to buy and how to buy, right? So I really don't know how, and I know the concept, if you can get money and keep buying a good assets, then you can keep multiplying. It's like a repeatable process, but I have no idea where to buy and or how to buy, right? So basically, yeah, that's how I come into the course. So to go a bit deeper into that, mid 2021, I was already considering buying, but I kept delaying, procrastinating until around I think October or November 2021, where I came across your content and what value you can offer. But I guess at that time I didn't have enough trust in you. So normal, right? People
Yeah.
people do that, right? So I was considering using a buyer's agent. Right? I was really contemplating between using buyer's agent service or taking your course. Until one point, I was having a cam night with my friend, just two of us, so boy and boy. So we were just I was really passionate in property, and I asked him, "Hey, if you were in my position, what would you do? Would you actually spend XK, which for around six K back then, of course, or use buyer's agent, get it done for?" And then he was saying, "Look, I think education is forever with you, right? You do it once and it's with you forever. Whereas buyer's agent, you gotta keep using it, and at that time, that's when I decide, yeah, I'll do the course rather than using buyer's agent. Yeah, so
Yeah, obviously I'm biased, but the best
mm,
investment is obviously in yourself. And like
yeah,
just from my
yeah,
vantage position,
mm,
you've bought 6 properties now. If you'd used a buyer's agent, 15,000 per property, you would have been down 90,000, which is like more than a deposit. It's almost two
Mm.
deposits, and maybe you wouldn't even been able to get to your fifth or sixth property. But anyway, I have a lot of self-interest in saying that.
Yeah,
Um,
yeah,
and
yeah,
so like how before we get into the properties, and I do want to go into like sort of the nitty-gritty,
yeah.
just kind of take me through the process of like, did you find buying your first investment property difficult or hard? Or if it was difficult, did it get easier the more you bought, or just kind of just at a high level, like, because I know so many people are like, oh, it's
Mm,
so hard. Like, there's so many things to worry about. What if like I get a, spanner in the works or a curveball? I don't know how to deal with it. Oh, it's just so hard. I need to outsource it. Like, what was your
mm.
experience?
So the first one was your course is great to begin with. I'm saying this, probably a few K people watching this video. Hands on heart, your course is really great, very structured, and it's not generic. It's actually a step by step where you show me how to buy, right? And but again, no matter how great a course is, you gotta take the action, right?
Yes.
When people ask me about what's PK's course like, I'm telling them what I tell them is it's like a GPS, right? It's like a GPS. It shows you how to get to from place A to place B, but you still got to be on the driving seat and take charge of the car. And PK, you are always available. You're sort of like the customer support of the GPS product. If you don't know how to get there, then I contact you and you come back to me within 48 hours. That provides a bit of clarity. So that's how I see it. So with your course, I'm one of the bad drivers who's really bad with direction. So I always rely on GPS, and that's exactly
Mm.
how I bought my first property. I followed the course, not 100% because it's very hard to find the perfect property and perfect location, but it was good enough that it probably in the top 5%, of purchase. Yeah. So.
Yeah. And I
Mm,
just want to say as well, like, hopefully people who are watching or listening, there'll be many thousands.
mm,
Like, all of this is like sincerely and genuinely honest kind of conversation between Richard and myself. Of course,
mm,
like, I want people to do my course, like, there's no doubt about
yeah.
it. But Richard's
Yeah.
actually a buyer's agent, and he didn't like do the course already being a buyer's agent. He kind of
Mm,
caught the property bug and like kind of fell in love with the process of buying and what it's been able to do for him.
yeah.
And so he's become a buyer's agent. And this is not me kind of plugging him either. I don't even know what your company is called. But I just want to emphasize that this is kind of like quite impartial advice
Mm,
that
mm,
Richard, and I'm very grateful for it as well. It's hard to find honesty
mm,
these days. But let's go to
yeah.
your first property. I mean, it was a
Mm,
really good one. This was south of the river in Perth.
mm,
This suburb, kind not like Waikiki or Warnbro, but quite close to those areas, was literally the suburb that had almost no supply back then, and that's kind of resulted in the purchase price going from 381, and the most recent valuation, I think you were saying before air, was it like $90,000 more or something like
yeah.
that?
471 as of yesterday. Yeah. Yeah.
471 as of
Yeah.
yesterday, and the
Yeah.
what's it renting for at the moment?
550 at the moment. Yeah.
550. And
Yeah.
so hang on a second. Initially it rented, because I have it in my notes, for
Mm.
450, is that right?
For- yeah, that was 450 last year. Yeah.
450, and it's gone up
Yeah.
100. So I just want to like kind of talk about this because you've invested almost at the worst time possible when interest rates had started going up, yet you've achieved, what is it, like 25% growth or even more than that in less than
Mm.
12 months. And also your rent has gone up. Is it meant that it's still positive cash flow, or is it now
Mm.
costing you money to hold? What's the analysis on it?
Um, I can't remember exactly, but it doesn't hurt me enough because it's probably slightly negative or neutral or slightly positive around across that territory. Yeah,
Right.
because I'm paying 6% of interest for
6%,
that one.
which is not
Yeah.
too bad. 6% interest
Yeah.
rate's not too
Yeah.
bad. But I guess it's like really interesting because, you would have thought that all these, I mean, there's so many people out there that are like, oh, all these investors, they geared up to their necks, to the hilt. They bought all these
Mm,
properties and the interest rates have gone up. They must have to all of a sudden sell all their properties, right? Because
yeah.
they just can't afford them anymore. But we'll go through your journey, but this is just not the case. Like this one's basically still paying for itself. What was like
Mm.
the biggest lesson you learned in like this first property investment that you had achieved?
Yeah, so this one, if the agent is telling me the truth, I was just 1K above the second highest, right? And there is no point for them lying, right? So I was just 1K above the second highest, who actually offered without finance and offered with 50K deposit, I guess, a bit more attractive than my offer. So yeah, that was one of the lessons learned. I tried to find, what sold recently in the market. So one of the properties that got sold, still under contract, I was told it was 370K. So not many people would know because it's still under contract. The agent is not supposed to tell me, right? So I know the people who missed out on those properties are probably looking at the one I'm buying now. So and naturally, if you miss on 370, if it's sort of the same quality, you would go 5 or 10K above, right? So
Yeah.
my guess was they would probably go 375, 380. So I just went 381. What happened? So yeah. So I
No,
guess
that's
my lessons is do your due diligence, talk to agents and people there. Yeah.
and give weird offer amounts,
Yeah.
371 or 381. Just add like a 500 or something. It might just be the difference between you
Yeah.
getting it or
So
not getting it.
yeah.
No, good advice. And so your second property now, you actually went to Cairns.
Yeah.
Well, you
Yeah.
didn't physically go to Cairns, but you bought up in Cairns for
Mm.
465. What kind of like, drew you to Cairns, or what was like the biggest lesson learned from your second property, which was also renting at that time for 500? Is it still renting for 500 or is it more?
No, it was actually rented for 480 when I
480?
bought it. So I
Yeah.
had incumbent existing tenant.
Mm-hmm.
It's 540 now. So
540.
yeah,
Okay.
yeah. So
And that's
yeah.
a big block size with side access. How's that been going? Has that been rising in value, or how's it tracking along?
Yeah, so this one is actually one of my worst performers, and that's not because of the market. It's because I was a bit emotional when I bought this property. So it's in Cairns, and it's a really nice place. And I bought this in April 2022, so just before interest rate starts climbing up. So
Mhm.
I was still putting slightly above what I think the market value was, right? Because it was very competitive market. So I paid 465. I think I could have got it for 455, right? Because yeah, I got accepted right away. So my lessons learned on this one is really, I don't know, do a bit more bargaining, I guess.
Yeah.
Don't get too emotional. So this property's got a mountain backdrop, so I really love mountains. So I thought I gotta have this. I gotta have this. So yeah, but it still grew regardless. Yesterday we had St. George valuation 541. So that's about 70K more or less
70K. Yeah,
in a
on
year.
a base
So
of 465. So
yeah.
yeah, it's not like, like 30% growth or 40% growth, but it's still double, well, really good double digit growth. And I think that's really good that you've
Yeah,
been
yeah.
honest as well, because yeah, like there's no need to overpay for properties. Like it's hard-earned money. Don't even pay 10,000, 5,000 more than it's what it's worth, even if you love mountains. I actually have a property very close to this, as you know, Richard,
Yeah,
and
I know. Yeah, I
that's
do.
been one of my worst
Your worst
performances as well.
performance as well.
Yeah.
Yeah.
So
High five.
no, that's
Yeah,
good advice. Keep
yeah,
the
yeah.
emotion. I see so many people, especially right now in places like Perth, they're just like, I just need
Mm,
to get on the property ladder. I'm just going to pay whatever. Like that's
mm,
literally how capital growth occurs. People are like, why are
mm,
people overpaying for properties? But if that consistently happens, that is actually capital growth in action. But don't be,
mm,
that statistic. Don't be one of them. Pay, true
mm.
fair market value. Don't
Yeah.
overdo it.
And I guess back then, my interest rate was still low, so I still have a lot in my borrowing. So I thought I gotta keep buying. And again, it's not the right attitude really. But thankfully, the market still grew because it's a growing market even now. Yeah.
Yeah.
So
Yeah.
yeah.
And that theme continues. So once again, you bought
Mm,
south of the river in Perth. You bought for 393,000,
yeah.
if I'm not mistaken.
Yeah.
And once again, if you're buying these kind of cheap is not always nasty, more affordable, inexpensive
Mm.
properties with high yield, you can go again and
Yeah.
again. How much is that renting for at the moment?
This one is 550 as well.
Wow. So the rents have like really, really kind of helped your portfolio stay above
Right.
water and, still be self-sustaining.
Yeah.
Um,
Mm.
and so you had bought three properties at this time. Now you're starting to be more experienced. Did you classify this as more of a like professional purchase, or how would you consider this one?
This one is not the one that I'm most proud of.
Okay.
But this one is still a good deal because this was purchased in July. I think there's slightly less competition because the media is talk, interest rate starts going up and all those noise around. So this one was somehow easier than before. Again, probably could have got it 389. I don't know, but it's 3-4 grand is it's okay. It's grown as well in this area. So
Yeah.
in this suburb is actually I use this suburb in when I talk to people because I bought this July, right, when interest rate starts going up. And this suburb actually on real estate, it grew 21% for the last 12 months.
Okay.
So right when interest rate starts going up aggressively. So yeah.
Yeah.
So,
And do you
mm,
remember, like, as soon as interest rates started going up, like you were saying, May,
mm,
June, July, August last year, the
mm,
media was just having like a party, there was just so much
mm,
doom and gloom about property
mm,
markets going to crash. Sydney definitely did started
mm,
to go down at that point.
mm,
Melbourne was going down at that
mm,
point as well. And I just remember so many people were like paralyzed on the sidelines, not really
mm,
getting in. And this is not me like creating FOMO and trying to tell people, oh, get in
yeah.
now, it's not too late. But like what, with the benefit of hindsight, what is
Mm,
your advice to someone, regardless of whether you're interested in doing the course or not, but just someone who's
mm,
like umming and ahhing about actually buying their first or next investment property right
mm,
now in August 2023, because there's still a lot of certainty. Interest rates are still probably going to go up a little bit more. Is there a
mm,
recession around the corner? I don't think so, but there could be. What's your
mm.
advice to people who are like just kind of stuck, not sure what to do?
Yeah, look, I think uh you know I think you always say, or someone says that buy when you can afford, right? I think as long as you have your emergency fund available when in times of need, you should be okay. But you're missing out on this opportunity we have in Australia. I'm from Indonesia originally, and um, credit is so high. You're paying 10% interest easily to buy a place, and because of you're paying, and the rent is not high enough to cover the running costs. So you're in Australia, you're only paying 6%. This is considered high, 6%,
Hmm.
and you have a rent that even goes positive. When I told my friends and families who are in Indonesia, they couldn't believe it, right? So I think it's an opportunity that everyone can have. I know a nurse who's built 5, 6 um, properties portfolio. I think she was in one of your YouTube interview as well.
Yeah,
And
yeah,
I know,
don't.
don't, yeah,
Yeah.
don't, yeah. And I know a doctor who earns a lot, but they don't really invest in themselves in their future. I also know a story of how in accounting firm you have a partner, basically
Yeah.
the business owner, who earn a lot, but then the personal assistant to that business owner. Sorry, I'm going a bit off tangent here,
No,
but
no, it's interesting.
yeah, the personal assistant to that partner actually has more assets and a more somehow a secured future, and whereas the partner is sort of splurging, buying expensive cars. And
Hmm.
the way I see it is, it's an opportunity to all Australians, as long as you put the effort and calculate your risk again, buying the right assets in the right location and know your numbers as well. So I've spoken to a number of my friends. I hinted to your course, but sometimes people they're just not ready to take action, and
Yeah.
I don't want to be one of those annoying persons who keep pushing. But I just felt like, do you have an alternative plan, like for your future? Like, have you actually
Hmm.
thought about it? So yeah, so my advice is take action, talk to a lot of people, and get educated.
Yeah.
Educated, yeah. Mm,
And it takes like a level of maturity as well,
mm,
right, Richard? I mean, of course, it's in like my best interest to say buy property. Like there's so
Mm,
much like self-interest involved, but
mm,
genuinely people need to have like a sense of maturity to say, like you said, even if you're making two, three, $400,000 a year, if you're not
mm,
converting that active income where you're trading time for money into
mm,
passive income, when you do stop working or when you're forced to stop working because that partner works at PwC and just got laid off or whatever the
mm.
case is, right?
Yeah.
Then like it's like, oh, well, I had this amazing lifestyle, but now I have nothing to show for it because I didn't invest that money. And like
Yeah.
it doesn't necessarily need to be just real estate.
Mm,
Like a diversified portfolio is always a good thing. But I
mm,
mean, once again, self-interest, real estate with the leverage it provides, the opportunity
mm,
that exists in front of us in 2023, 2024. Like I
mm,
just think everyone should be at least having the maturity to consider it and making an
mm.
unemotional decision. Put yourself 40
Yeah.
years from now, maybe not 40, 20 years from now, and be like, what's the
Mm,
lifestyle I want? And if I continue to just rely on my active income, am I really
mm,
going to achieve that lifestyle? If not, then you don't
yeah.
have to do it with me. Just at least do something. Like do it for
Do
yourself, whatever,
something.
but do at least do something. Action beats inaction every day of the week.
Yeah, 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 very true. And it's tax free in terms of the equity that you
Uh-huh.
can draw. And then all of a sudden you have this 100, 200K of opportunity. It's not tax, it's different than if you're earning 300K, basically half gone already. But taking equity out as a loan, it's tax free, right? You're just paying interest on that. So
Mm-hmm.
it's
Yeah.
a system that capitalism, I think.
It's capitalism. And you mentioned like in Indonesia, it's not this easy. And of
No.
course, not just Indonesia, but like even like now we had record Chinese buyers, and these aren't necessarily like foreign buyers. It
Mm,
could be like local Chinese people that are bringing money over.
yeah.
But they just don't have this opportunity in China, right? Like
No,
it's
no.
just the market is
Yeah.
completely different. I think even New Zealand doesn't offer this opportunity. The yields are much lower in New Zealand. The tax regime is different, the way
Yeah.
that equity and LVR works is just completely, I would
Mm,
say, inferior to here. So I think we're
yeah.
just in the sweet spot, make the most of it before it gets taken away.
Well, I wish
Um,
we can lock in 20 years of 2% interest,
that would,
like in the
yeah,
America. No,
fixed
just
loans,
kidding.
30-year fixed
Yeah,
loans, that would,
yeah.
yeah, various pros and cons, but yeah, it would be
Yeah, that's
interesting
right.
for
Yeah,
sure.
yeah, yeah.
Okay, property number four. So now
Yeah.
you actually went to regional Queensland, not as far north as Cairns, but more central, and
Mm,
you bought once again like inexpensive, kind of I would
mm,
say recession-proof, interest rate rise-proof property.
mm.
This was for you used that interesting technique again, $322,011, if I'm not mistaken.
Yeah,
Um,
yeah.
and the valuation that you had told me at the time, 2 months after settlement, was 375. So that's pretty terrific. And you did like a bit of a
Mm.
renovation on this one, is that correct?
No, I
No,
didn't.
no. Not
The
this one.
number
What was
doesn't work.
already renovated?
No, no, no. I'll
Okay.
just I'll just exhaust the life of the property before I do my.
Okay.
Yeah,
Okay.
I did. It wasn't feasible after. I'd rather
Right.
use the money to buy another property for
Right.
now.
So you ended up not doing the reno. So what, because I had in my notes that post reno it would have rented for 500. Like actually you didn't do the reno. What did it end up renting for?
500.
Oh, you got it 500. Oh, that yeah. Actually, I remember now. Okay. So
Yeah,
what's the point of renovating it if you're getting like what is it,
yeah,
like a 7 or 8% yield
yeah.
anyway? Um,
That's right.
and I mean that's a pretty terrific rent. Like, has that gone
Yeah.
up in the last 6 months or something?
Uh, no, I locked in for 1 year because I think 500 is at the high end of the spectrum.
Yes,
But
yes.
we are buying in a place where rental is very demanded, right? It's part
Mhm.
of the data, like vacancy rate. So yeah, so it pays. Yeah, so
Yeah.
500 was I
Right. So you
locked in
lock
for
that
1 year.
in and buying, 322 with an 8% yield, you can't
Mm.
really go wrong. But what was
From the
like,
get go. Mm.
um, a lot of people want these types of deals, they don't
Mm.
want to spend seven,
Mm.
$800,000. They want to spend sub 400K, sub 500K. They want to get
Mm.
these 6, 7, 8% yield type
Mm.
deals. In your honest opinion, or like in your experience,
Mm.
what's like a piece of advice or what's a tip or trick that you can give them,
Mm.
so that they can actually just go off and do this even without the course? They can just actually make headway into achieving this kind of result.
Yeah, so you gotta be quick. This is one of the secrets in this deal was I was extremely quick. So I found out about the property. It was off market to begin with. It was going to market, so pre-market. I think within 6 hours, and this credit to your course again, but within 6 hours, I was able to know what it should be sold for, the value of that property. So, and I knew this was owned by a Catholic church, right? Not individual.
Okay.
So my assumption was there's less emotion in terms of, church just get it away, like just
It's
sell
an
it.
institution. It's almost like an
Institution.
organization. Yeah.
Yeah. So I lowballed it. I valued 370 when 371, something like that. So I put in 322. And basically the church still wanted to go to the market.
Right. Because it was off market at this stage, like pre-market. It wasn't actually listed on real estate yet.
Yeah, it was Tuesday or Wednesday, right? So,
Right.
but I already signed the contract on Thursday or Wednesday even. Yeah.
Uh-huh.
So, and I kept applying pressure, like I'm looking at another offer here in Vandenberg. Can you just get it across? Long story short, it still went to market on Monday for like 6 hours.
Okay. Okay.
And for some reason, maybe the agent was really nice to me as well,
Uh-huh.
providing her recommendation to just take this guy's deal.
Right.
So yeah, we got it. So it was on market for like 6 hours. So on
That's
Monday.
weird. So they put it on market for, you'd think if they're
Sorry,
going to go to the
apologies.
trouble.
They actually it was on market on Saturday, right?
Uh-huh.
So Saturday home open, but when I said 6 hours, probably more like on Monday, like during work days. It was
Okay. Like
Monday
6
morning. My
business
offer was
hours.
accepted. Yeah.
Yeah, got
right.
it. Got it.
Yeah.
And so that even though they went to the trouble of paying realestate.com.au fees for listing it and putting it on market, they took it off on Monday.
Yeah.
It's kind of like some people think, why on earth would someone not do a proper marketing campaign when they're literally leaving money on the table? Like if they had done a proper marketing campaign, had it listed for a decent 3, 4, 5 days, they would have got, 370, 380.
Yeah.
So
Yeah.
like
Can I
it's like,
jump in, PK? I
yeah,
forgot
go for it. This is
a
where I'm
very
getting
important
to.
information. Yeah.
Yeah.
Actually, as soon as the seller decided to bring it to the market, I went up to 331.
Okay.
Right. So I went up to 331. That's when it got accepted.
Okay.
And then you go through the negotiation afterwards.
Oh, okay. So you did the whole like boomerang technique. You go up and then you bring it back down. Okay.
Yeah.
Cool. I like that. I like
That's
that.
what happened.
No, that's and this is the thing, like you have to be fast, but negotiation, I mean, you were a very good negotiator even in your first property. The second one, you got a bit emotional, but negotiation is something that can be easily learned. You're trying for a win-win situation. I'm sure the person selling it, whoever it was, like an admin person, I don't know, at representing the church, they also thought, like, do you reckon they thought they were hard done by, or from their perspective they were like, okay, I dealt with someone seamlessly, there was no issues, very professional, friendly, I got a reasonably good price and I got a low settlement or easy terms? Like, do you think it was a win-win situation?
Of course. Yeah, and they got that extra 9K right at the end.
Right.
So they thought, oh, okay, let's get it through. So yeah, that's what I was trying to demonstrate as well to the seller's agent. But how can I demonstrate that if I'm not fully confident in my number, like exactly know what I'm doing? So, and that's where your course helps me to add my confidence in making my decision. Yeah.
Sure.
So,
cool. Let's go to number 5 now. So these are more recent. So this one was back in Perth. Purchase price $511,711. The valuation that I think you'd emailed me by the bank 1 month after was 575,000. And so what's that, like 60,000 or around $60,000 more after 1 month? I assume this is a different bank. I can't remember.
Different bank.
Yeah, different bank, because the same bank is reticent on revaluing it that quickly. The rent is 600, and this one was actually off market. So I want to, and it was subdividable, I think I have in my notes. So I just want to pick on that for a second, and feel free to let us know of any other details about the property. But how did you, this is kind of your second or third that you'd kind of got pre or off market. How did you actually go ahead and do that?
Yeah, so rent was actually 640 PK, so it's 6.5% yield
Oh,
from the
my
get-go.
mistake, not 600.
So
Okay.
it's pretty good deal, I think. This one was looking for a client at this time, right? I wasn't even finance ready at this time, and I couldn't get finance with major banks anymore at this stage. So I was looking for a client on this one, and it's a great property but poorly marketed. So I decided to call the agent. Sorry, there was another property that was marketed, which is extremely poorly marketed, and then I called the agent, and then the agent was telling me we have three others coming
Okay.
soon, and they're off market, right? So I assessed those three on Sunday night for a good 6-7 hours. Um, I offered it to my client. He said, "Nah, it's above 500K, so I can't afford it." So okay, that's fine. So on Monday morning, I randomly, not randomly, but I just tried to lowball it. Like, okay, I'll take it if you can sell it to me for 512, right? So, and surprisingly, it got accepted. So I genuinely thought it was going to go. If it goes to market, it was going to go for easily 570,
Right.
575. This is a 5 bedroom, 2 bathroom property. Yeah.
Right.
So how I did it was actually don't get put off with bad photos or bad marketing. That can actually be your best friend sometimes. Yeah.
Yeah. And sometimes that, like you just demonstrated, the best way to get off-market opportunities is just to miss out on like a couple of properties. Like you call an agent, you show
Yeah.
your interest, and they're like, "Oh, sorry, mate, this was already sold," or actually it's not quite right. And but now the
Mm-hmm.
agent knows that you're ready. And if you're a nice person, then they're like, actually, I wouldn't mind dealing with Richard. And he'll tell you, I
Yeah.
have this three or two or one or another four coming up. I'll send
Yeah.
them your way. So it's like it seems like I'm sure you don't use it in your business, but a
Mm.
lot of buyers agents kind of use off market as this kind of secret source that, you
Yeah.
have to pay $15,000 to a buyer's agent for.
And most
But
of them are crap anyway.
most of them are crap. Most of them are very
Yeah. I
rubbish.
yeah. Turned
But
down many of
anyone
them.
can do it.
Yeah.
And like,
Mm.
I hope that people approach you for this, but anyone can do it
Yeah.
themselves as well. You've demonstrated. So that's
Mm.
terrific. And then it's subdividable as well. I
Yeah.
don't know if that, like if the agent knew about it, because it seems like
Agent
too good
new.
to be
Yeah.
true at that price range. You know what I
It's
mean?
actually too good to be true, even to me now. It's valued 604 now, so 90K in 3 months. That just demonstrates that I actually bought it way undervalued,
Uh-huh.
um, below market value. So yeah, it's subdividable. It's almost 900 square meters, and the
Mm-hmm.
way the house is positioned is it's almost as the house is not in the middle of the land.
Uh-huh.
It's already to the side, so you can almost just build another house or granny on the other
So you
side.
don't
It's
need to
called
lift and
cul-de-sac.
shift it at all. You just leave the existing
No,
dwelling where it is.
yeah, yeah, and the agent knew about it. The agent is lazy. It's not one of those big. Hopefully, he's not watching this, but it's not one of those big franchise like Ray White agents where
Uh-huh.
they go through all the marketing, video, professional video.
Yeah,
It's one
yeah,
of those mobile phone, take photo here,
yeah.
one of those agents. So can be your best
Cowboy
friend
agents.
sometimes.
I love those
Yeah,
cowboy agents who are out of town
yeah,
or they don't operate in that suburb normally and they're just like, oh, I don't really care about this client. This is bad, by the way. They should care about their client, but
they should.
they just
Yeah,
want to get it done, like just move on. And like the property market is so inefficient for this
yeah,
reason. People always, I don't know if your clients ask you, Richard, but everyone
mm,
always asks me like, oh, PK, you just like posted the deal where you said it was like under market value. Like,
yeah,
surely that's not possible, right? Because if you
yeah,
paid for something, then that becomes a new market value. And I'm like, the real estate market is inefficient. If I've paid for something
mm,
at a certain price, but then the next three deals in the same week were like much higher, that means that there was
mm,
something inefficient about my transaction. The vendor
yeah,
didn't know what was going on, the true value of the property. The agent was lazy. So many things can happen, motivation. So,
mm,
yeah, this is like I mean, I know you were trying to get it for your client. It shows that you're actually like really have integrity, that you're actually giving an amazing deal for your client. So amazing that you bought
yeah.
it yourself.
Yeah,
And that's I
and
just want to
also I think, yep, sorry.
yeah, no, you go.
I think it was you or someone else who said in one of your podcast episodes, 70% of buyers are owner occupiers,
Yes. Yes.
which means you're already better than those 70% of the crowd because you're buying with your head, with your number. For example, if you buy something 500K, who knows, the next three purchases, like someone else, they kick the price up now because they're buying it hard, right? So that's one thing I like about
Yeah.
the real estate.
No,
Yeah.
well, so you don't need to do my course to like know more than 70% of the market, really, because
Yeah, yeah,
70% is owner occupies, highly
yeah.
emotional.
Mm,
I just wanted to pick up on one thing as well. You said you weren't finance ready, because the main big four banks, they
mm,
weren't going to entertain you. So like
mm,
how easy or how difficult was
mm,
it to kind of go to a second tier lender? And did you
mm.
have to pay a much higher interest rate to
Yes.
get finance?
Absolutely. So I won't name the bank. I
Okay.
actually put a negative review to the bank, and then I got journalists, want to put my story in
Oh,
like
no way.
news.
All
Yeah.
right.
So it's not for everyone, but I can see from bigger picture. So the bank is like a thief, like very high interest rate. There's a lot of costs here and there, but that's the only way to get funding at that time. And if
Hmm.
you're already making 60K in the deal or 70K in the deal, losing 5K, 10K, 15K, so what, right? So I have a very good broker who share the same last name as you, but not related at all. So
Okay.
he's a property investor himself. We've got 12, $13 million of properties. He could assure me that I can get it easily with this second T. It wasn't the smoothest journey, so
Right.
but we got it at the end. So
Right, right. It's
yeah, yeah. Mm,
interesting to hear. And like as interest rates go down, as your own income goes up in your career progression or now in your business, then you can
yeah.
just refinance away from that second tier lender, go back to one of the big
It's
four
exactly what
banks
I'm
and get
doing
the
now.
interest rate. Oh, there you go.
Yeah,
So
yeah.
anyone who's watching or listening, like don't be scared of going to like the First Max or like the Pepper Moneys or the Liberties. Like I myself have gone through that route. And
Mm,
there's just like the cost of doing business. But if you're buying amazing properties
mm.
like you are, Richard, then yes, like show me whatever interest rate, I'll take it, right?
Yeah, that's right.
You're making money.
Mm,
Okay, let's go to our last property then. So
mm.
this was actually under $300,000, and once again, regional Queensland,
Yeah,
bought for,
yeah,
and let me know if any of this is wrong,
yeah.
$298,000. The valuation instantly, I think it was, by once again a different bank for refinance purposes, was $356,000. So that's like $58,000 of growth, or you could say instant equity on a
Mm,
base of 298. Like that's
mm,
pretty amazing on,
mm,
20% plus. And rent is 400, so I'm sure it's basically kind of treading water at the moment, not really costing you
mm.
too much. And once again, this one was poorly marketed as well. Is that why you were able to get it?
Yes.
Yeah, you're so let me ask like a more interesting question for everyone who's watching. Have you been able to pick these properties that are poorly marketed? Like what is it that
Mm.
tells you, hey, there's something in this that the agent hasn't marketed properly?
Yeah, yeah. So contrary to what people might believe, it actually gets harder and harder for me to buy more properties now. And the reason is I keep wanting to better my previous deal, right? Either for my client or for myself. So
Yeah.
it's a very competitive market. It's really, really hard to buy a good deal, right? A bargain. So this one, actually, again, was looking for a client in that price range. I spent hours, that's what I do anyway, right? Whether I'm looking or not, I browse on certain location because just a nerd in that sense.
Yeah.
And this one actually was in the market for a good 400 days. I don't know how. It's crazy. Like
400 days, did you say?
based on the data that I
Right.
checked, like
Right.
on CoreLogic. So I think it was on the market, and then it get taken out, goes back to the market, and it's got existing tenant. I think it's got bad tenants, and then
Right.
got replaced with a better one. Yeah. Long story short, um, yeah, this one I didn't want to go higher than after my client said no, right? So because bad photos, I didn't want to go higher than $292,000, and
Mm-hmm.
I was hard on that until I saw exactly next door to that property, basically built by the same builder and have the same layout, almost exactly the same. The only difference is this one has got 4 bedrooms, whereas that one only has three
Mm-hmm.
bedroom, but a larger living room. And I know the agent who is selling the next door is one of the highest performer agents because I've been
Okay.
watching the market for a while. I know, and it was asking for, I think, above 330 or something. Can't remember. So I knew she was going to sell it much more than that. As soon as I saw that come up, right away I put in, all right, let's just buy for 300, and the seller accepted it, and then
Right.
obviously do further negotiation. It became 298, and yeah, it's true. The next door was sold 335 for a 3 bedroom. So yeah, so that's how it happened. Yeah.
Yeah. And that's like a direct
Mm.
comparable, like no questions
Yeah.
asked. It's right next door. There's one
Yeah.
less bedroom and it's sold for more. So it's
Yeah.
like it
Yeah.
can't get better than that. I just want to make this point as well that like normally to buy is a caveat actually or a disclaimer that
Mm.
it's not like you've said it as well. It's not just like so easy within an hour of like,
Mm.
doing the course. You can just buy these types of properties. You actually need to
Mm.
have focus and you need to have like a certain amount of discipline. And to get
Mm.
these deals that are off market, that are like so significantly undervalued, whether it's the suburb that's undervalued or the property, really honestly, big buyers agents, those that you see on podcasts or different YouTube
Mm.
channels or all over the place in the media, they're not going to get you these properties because they don't put in the amount of time that you have for yourself,
Mm.
basically, or for your boutique amount of clients in
Mm.
every deal. They're just not going to get it. So if someone does want to use a buyer's agent, like I'm not like I don't even know
Mm.
what your company's called, but I would just say
Mm.
use like a small buyer's agent. Like if you're like, hey PK, I would love to do your
Mm.
course, but like
Mm.
I just have no interest in property, or I don't even
Mm.
have 3 or 4 hours or even 5 hours a week over 1 or 2 months. If that's you, then please, please, please don't
Mm.
go to one of these big name buyers agents. Go to a
Yeah.
small boutique buyers agent because they will
Yeah.
put in the effort. I'm just
Can I
saying this
add to
like
that,
honestly,
PK? Yeah, and that's exactly one of the reasons why I started my own practice, right? So when I have like a they call it prospect call or just initial call,
Right.
I like to use your analogy. I think gardeners, it's not like you are hiring a
Oh,
surgeon
yes.
where you need to hire a surgeon. You can actually do your own gardening, or if you lack time, you lack confidence, or you don't have any passion, then you can use a buyer's agent, either mine or someone else. That's one of the reasons that I become a buyer's agent. Was I actually scouted some of these big buyer's agents purchases, and sometimes I felt like they're not really giving the best deals, and I
Mm.
I keep telling myself I could have negotiated better on those deals. Some of them are in the middle of housing commissions. Some of them are right in the flood zones. When I do all those checks, some
Yeah.
of them are in the main roads even. Like, oh crap, why are you buying? Why are you paying 15 grand for something like this, right?
Yeah.
And I felt like because in my circle of friends, at least, everyone can benefit um, from property investing, right? It's like
Hmm.
probably 90% of my friends, they all can benefit. And I feel like there is not enough um, buyer's agent or people who wants to do your course, something like that. So that's one of the reasons why I'm doing what I'm doing.
Yeah,
So
and it makes me super
yeah.
proud. I mean, regardless of whether you're a buyer's agent or not, you're
Mm.
still helping your friends. Like that makes me
Yeah.
proud because
Mm.
like even though they haven't done the course and I haven't made a buck
Mm.
off them, so to speak,
Mm.
like they're still getting really good outcomes because you've
Mm.
created like this epicenter of excellence. And
Yeah.
then, imagine if there's like so many epicenters of excellence and then friends
Mm.
and families can just benefit and we actually get good outcomes as opposed to
Yeah.
paying $15,000 for some random big name buyer's agent, giving them a
Right.
5-star review on Google because you think they did a
Mm.
good job. That's just because
Mm.
you didn't know what a good job
You didn't
actually
know. Yeah,
means.
that's right. You
Yeah,
can't challenge their
can't challenge
recommendation,
it.
right? So yeah.
So
So
stepping back, like
mm.
I guess,
Mm.
you've made in the last 18 months, despite
Mm.
interest rates rising, you've made
Mm.
like, let's say $500,000 of equity
Yeah.
on a cumulative basis. Your properties are all by and large self-sufficient. They're all kind of paying for themselves. Obviously, the long-term goal for anyone in real estate, and this is not secret sauce or anything, is you
Yeah.
hold it for a period of time, let capital growth do its thing, and then
Mm.
sell a couple or a few, use
Mm.
those profits to pay off the others, and then you've got your passive income just goes like that,
Mm.
unencumbered, no debt. You can kind of just live a bit more freely. Is that your plan? And kind of just take me through what your
Mm. Planning to do.
long-term
Yeah.
aspirations are.
Yeah, so I actually paying principal interest on all of the properties now.
Hmm.
And the way I see it, because you're actually getting less interest rates by paying principal and
Right.
interest.
Right.
And by paying principal and interest, you're actually doing a forced saving in the equity.
Yes.
So maybe in 6 months, now I have a bit more equity, I can just cash it out. That's how the financial system works, right?
Yeah.
So
Yeah.
just cash it out, and all of a sudden you have this 100, 200K to capitalize again.
And you
So
forced yourself to be disciplined and save
yeah,
in the interim.
yeah. As long as you know you have enough to put food on your
Sure.
table, so different people do it differently. But that's what I'm doing. I wanna keep on going, PK. To be honest, if I can, until bank really says no.
Uh-huh.
Not from the perspective of being greedy. I just wanna accelerate. I guess my wealth creation, because I want to
Mhm.
retire my wife. That's my first goal,
Beautiful. Beautiful.
uh, so she can be full time mom when we have more kids. So I have my first one coming soon. So
Oh,
yeah,
nice.
so that's I just want to accelerate my progress. Yeah, so
Yeah, that's so
that's
cool. Honestly, that was like one of the biggest, proudest moments of my life
mm,
when we had our son. Like
mm,
my wife just never worked ever again. She was a
mm,
chartered accountant, and it was just like not that like she like that I was holding her back from working or anything, but like she's
yeah,
just like she's born to be a mum, and that's all she really wants to do.
yeah.
She
Same
never
with
really
my
cared
wife.
about her
Yeah,
career so much. So it was
yeah,
just like so
yeah.
happy. We were so
Mm,
happy that we are able to do that, and I think that's why we're kind of investing in real estate, right? Like not to buy a fancy car or anything, but just those small things in life.
mm,
And I just want to touch on this thing because it might have sparked some, maybe this is the last question, sparked
mm,
some curiosity. You're paying principal and
mm,
interest, so obviously that requires good cash flow. Like
mm.
I know you started a buyer's agency, but what do you do professionally? Like what's your trade?
Yeah, so I have my consulting business in the project management and procurement management in the construction industry.
Mm-hmm.
Um, and you have more control over your cash flow by running the business. And also, my principal place of residence is still paying 2% as of now.
Okay, that helps.
So that's my saving grace. And again, I have a story to tell for this. Actually, my broker was telling me to just do it 2 years back then. I said, no, I want 4 years, right? So again, you can listen to your professional, but you gotta make your own decision.
Awesome, awesome. All right. So last
Mm,
question from my
mm,
side, Richard. For
mm,
someone who's kind of like on the fence, I'm not talking about on the fence of doing the course, but kind of on
yeah.
the fence of
Mm,
starting or really taking their property investing seriously.
mm,
They're not sure if it's actually going to work. They hear stories like yourself and they think, oh, that person got lucky or they were
mm,
already rich to start with or whatever.
mm, mm.
Like, what are some motivating words or perhaps just some real words that you can tell a person like that so that they can actually not live with any regrets in 10 years' time?
Yeah, look, I think actually before you even asked that, PK, that was going to be my, I guess, last statement to
Okay.
everyone who's listening to this is, you start early if you can, like, don't procrastinate. I wish I started earlier. So I'm 30 now. I started when I was 29, 28. I
Yes.
think you started when you were 22, right?
21.
Something
Yeah.
like
Yeah.
that. 21, yeah.
Yeah.
So I think start early, start educating yourself if you don't have the confidence, even after all those education, do a course like yours. Hands on heart, one of the best courses you can ever do. But if you don't want to do the course, use my service. Like just make sure you are educated enough to challenge
Hmm.
whatever recommendation you've been given by a
Yes.
professional. Because even though it's like a gardener's, it's an analogy I use, you're dealing with debt here. You're dealing with a big debt, right? So I know someone who bought a penthouse in Sydney Olympic Park, if you know that area.
Yes. Yes. Yeah.
They bought it for 1.2 million, but because of the penthouse apartment, and it was valued 600K because it was settling during COVID and
It's
next
not
to an
good.
Opal Tower.
Yeah. It's
The
crazy.
tower that cracked. Yeah, so that you're dealing with that here. If you get it wrong, you get it really wrong. If you get it right, get a lot of reward.
Yeah.
So, but yeah, start early. I think that's one of the best advice I can give.
Fantastic. Fantastic advice. And maybe for
Mm,
someone who's watching or listening and they're like, oh, I'm already like 35, or I'm already like 45, or maybe I'm already 55,
Yeah.
then of course you need to understand these things so that you can build a calculated strategy for you. But the same advice applies. Start early when you're 45 is start now. Start early when you're 55 is start
Yeah.
now. Sure, you might be not able to achieve as much as if you had started when you're 21 or
Yeah.
31, but like the best time to start is now. But if you're not educated, like with or without a buyer's agent, just don't invest, because we're like you're saying, we're talking big debt, we're talking risks. If you're not calculated in your risk, if you're not like really getting those top 5% type of properties, then just forget it. Like honestly,
Yeah,
it's
that's
just going to
right.
land in a big heap.
Yeah.
But no, thank
And
you.
yeah, just one last thing. This is probably going to sound a bit controversial. But one of the buyer's agents, a good buyer's agent, I believe. I'm better, not just kidding. But he put
You
in
have to say that.
this controversial statement. I think the average Australians live until they are 80 or 85, according to
Yeah.
data. And then 65 years old is the retirement age. There's a saying, you only live once, right? But do you really want to work until you're 65 years old only to enjoy the last 15, 20 years of your life on pension, right?
Mm.
Or, if you can retire early, if you can retire when you're 50, then you at least have the last 35 to 40 years to live your life. Like, I don't know, if that, to me, that really triggered my thinking. And for some people it might. Yeah, just think about it, right? You only live once. You want to live freely, not
Yeah.
not um tied to financial
For sure, for
problem.
sure. That
Yeah,
might be the
so
penny drop moment for a lot of people. And if I just extend that a bit even further, I would say like, why like wait to live a joyful life when you do retire, or even at 50? Why not start now? And property investing doesn't have to take away from your lifestyle. I mean, just like your properties aren't costing you anything. You're building your
yeah,
your
yeah,
your
that's right.
family. You just
Yeah.
start now. I mean, it's kind of a no-brainer. You don't all have to be like me, who like I didn't even buy ice cream for like the first 1 or 2 years of my grad
Yeah,
job, just got saving for deposits. But you don't need to do that. Like you just do what Richard did. He's doing a better example than
yeah.
I am. But
Yeah. Unless you're
um
buying blue chips and you're paying
yeah,
30K,
well, that's the
30K
thing.
a
Like
year.
if you had just bought another property in Sydney, then
Yeah,
like thanks for coming. That was
gone.
it for you. Like no more
Yeah,
property investing. But
yeah,
anyway, this is going on. But I really do value your time, Richard. And
yeah.
and I just have to say as well,
Mm,
I always get a little bit excited when I get an email from clients that have said like I just got my offer
mm,
accepted or unconditional or whatever. And I get a lot
mm,
of those types of emails from you. So it's really cool and it gives me a lot of
mm,
satisfaction and reward,
mm,
when I see that happening. So big,
mm.
big, big congratulations. And of course, this is really just the beginning for you.
Yeah, thanks, PK. And again, I think your course provide a very solid foundation in doing what I'm doing now. I always have open mind to learn more beyond your course, but without your course, this wouldn't be possible at all.
Yeah,
So
no, we're always
yeah,
learners, right?
so
We're always
mm,
learning throughout our
yeah,
lives.
mm,
And
mm,
no, thank you for your kind
yeah,
words.
yeah,
And guys, thank you for watching or
mm,
listening. There's like more
mm,
than 100 of these, so even if you're not
mm.
interested in the course, honestly, I don't care. But at least go watch those 100 plus client interviews in the client results playlist on YouTube, because
Mm,
like they will serve to educate you and inspire you. Can't be what you can't
mm,
see. And when you hear
mm,
stories like Richard, you're like, okay, well,
mm.
I can do that. Or maybe you like get real competitive. I can beat Richard. Or even if I just get a snippet of what Richard has, like it actually inspires you. And hopefully that's what this
Mm.
content is serving to achieve. But thank you again, Richard. And guys, subscribe, hit the like button, turn the notification bell on, and I'll see you next time. See you later.
Thanks, PK. See ya.